We're back again. Welcome everybody. Today is the 31st of January 2025. We are going through our weekly round off just to look at the view of the week that was. Where we are sitting at today, we are looking at the total market capitalization of the cryptocurrencies ending at approximately 3.71 trillion US dollars, showing a marginal decrease of 0.01% for the week. Bitcoin experienced a slight dip of minus 0.21%, trading around 101,862,000 US dollars. Ethereum saw a positive week, gaining 4.16%, closing at $3,345. Bitcoin's dominance fell from 62.8% to 58.3%, indicating a shift in the market interest towards altcoins. The Fear and Greed Index is currently sitting at 76, categorized under greed, suggesting a potentially overheated market where caution might be warranted. Not explicitly mentioning for this week, but previously highlighted as a critical metrics for predicting Bitcoin price cycles, traders should monitor this sign of the market peaks. The decrease in Bitcoin dominance could signal the onset of an altcoin season, where other cryptocurrencies might see disproportionate gains relative to Bitcoin. Our top performers this week has been Lido at 19.48%, DEXA at 17.96%, Arweave at 12.32%. And they were the top gainers. The top losers was Fatcoin, losing about 13.09%, Onyx Coin minus 11.6%, and Movement at 6.61% lost. Those were the notable declines that we saw. Real-world assets continued growth and interest in tokenizing physical assets. And AI integration, despite corrections in AI token prices, this sector remains a key narrative due to ongoing development and potentials. Meme coins, despite their volatility, coins like Dob with Hat, WIF, and Pepe continue to capture the market attention due to their performance in the previous year. Trading volume, specific weekly figures I don't have at the moment. But however, there has been a significant participation in the market, what we were looking at, and the trading volume will show us that volume. But the market cap still tells you where we are in terms of the industry. On the open interest for cryptocurrency futures and options, the leverage daily open interest peaked at 396,000 contracts with a notional value of 10 billion US dollars. This suggests a significant institutional interest or speculative positions. So what are the advice for the traders emanating from this? If you look at the number of things that one has to take into account, diversification across narratives. So with market showing the signs of moving beyond Bitcoin, that is in terms of the market dominance as well looking at it, or the altcoin season seems to be starting, we need to diversify across different sectors like the real-world assets, AI, as well as the decentralized finance, the DeFi. This can help to mitigate risk while capitalizing on emerging trends. DeFi, it's important to look at Ethereum. Ethereum has been one of the best performing tokens, and as a result, you have to look at the ecosystem within its DeFi. So you will see some of the tokens also that are expected to follow suit with the altcoin season taking up, as well as the huge dominance of Ethereum within the altcoin season in terms of its dominance position. A decrease in Bitcoin dominance might herald an altcoin season focus on altcoins with strong fundamentals or those aligned with current market narratives. And given the high fear and greed index, be cautious of market corrections. Use stop loss orders and consider reducing leverage or exposure to highly volatile assets. A high open interest can signal where the market is betting. Look for tokens with increasing open interest as they might be poised for price movements, either up or down, based on market sentiment and news. Combined technical analysis with these insights Look at support and resistance level, volume spikes, and how tokens react to news development in their space. Keep an eye on regulatory news, which can dramatically affect market dynamics. For instance, changes in regulation could impact tokens like those on crypto.com, prompting re-evaluation of holdings. For long-term investors, consider tokens with solid technological foundations or those solving real-world problems. For short-term traders, capitalize on volatility, but be ready for quick exits if market sentiments shift. By integrating these insights, traders can navigate crypto market with a more informed approach, balancing between potential gains and inherent risk. Remember, crypto market is highly volatile, and past performance does not guarantee the results. And I would love to give you other additional advice around minimizing risks. So minimizing risks in the crypto market involves a combination of strategic planning, risk management, and continuous education. And here are some of the best strategies that I've selected. Spread investments. Don't put all your funds in one cryptocurrency or one type of investment like an altcoin or stablecoin. Diversify across different assets, including established cryptocurrencies like Bitcoin, Ethereum, and promising altcoins with strong fundamentals. Sector diversification. Invest in different sectors within crypto, e.g., decentralized finance, non-fungible tokens, layer 1 solutions, or privacy coins to balance out sector-specific risk and exposure. Risk management techniques that you can do is positioning sizing, number one. So only invest what you can afford to lose. I've always said this. Determine the size of your position based on your risk tolerance. A common rule is not to risk more than 1 to 2% of your total portfolio on a single trade. What is the second advice? Stop loss orders. Use stop loss orders to automatically sell assets when they hit a certain price limit. Beware, however, that in high volatile markets, stop losses might not execute at a set price. And this is one thing that beginner traders and some intermediate traders sometimes often do not understand. That depending on the size of the movement on your order book, so sometimes you will have the order book going past a certain value that you had put as a stop loss. And therefore, sometimes you would put a stop loss, but then a percentage variance in that stop loss where you would say between this point and this point, you would want your stop loss to protect the position. But it's always important if you are trading in a volatile market, spend more time on the trading desk because that's where you will pick up the movement in the market and therefore you will be able to react if the stop loss orders have not kicked in. So it's very key for you to understand when you are going to go into the volatile market and you are going to trade on volatile market, at the time that you spend on the trading desk and analyzing the market, understanding the pattern, the movement from the fundamentals of the market and your technical analysis, it becomes very key. Proportional to you wanting to take volatile positions or high risk trades, it means the time you are going to spend at your trading desk is also going to increase because you would then need to monitor closely what is taking place in the market. Education and research, stay informed, keep up with market news, regulatory changes, technological advancement, and the macroeconomic factors that could influence crypto prices. Technical and fundamental analysis, learn to read charts, understand market indicators, and delve into fundamentals of projects you invest in. This knowledge will help in making informed decisions rather than speculative bets. Security measures, use hardware wallets. Keep your significant investment in cold storage to protect against hacks and online threats. This is very key. So often the advice I would recommend, not that I'm giving you financial advice, but what I would recommend is have the cold storage, which is the offline storage of your coins. You can have a wallet that is a hot wallet, which means it's an online wallet, but then you would also have your funds that you are trading that are on an exchange. So when there is a challenge with an exchange, just like what happened to FTX, you are not fully exposed to the funds that are in that exchange. Or what happened to Celsius, which is one of those exposures that I had in Celsius. I was providing funding on certain key projects. And as a result, when that exchange went down, it locked the transaction on the exchange. And therefore, whatever I had in that exchange, I couldn't pull out the money. It's still going through the legal phases now, and they are trying to settle some of us that invested in it. So therefore, the advantage is I was only exposed to what I had on exchange on Celsius. But all my other portfolios that are on different exchanges are on different hot wallets, and also that are sitting off on cold storage, that is offline. So it's very important to make sure that when you are putting your portfolio, you know exactly what you are putting with your long-term investment trades. So whatever you are doing in your spot trade, that is a long-term investment, and your long-term investment is around the Bitcoin, Ethereum, or whichever other coin. You can even put a Solana there if you've taken a long-term position, because then those you can put them off exchange and put them on your wallet, cold wallet or a hot wallet type of a thing. And then your transacting portfolio will be on the exchange. But it's also advisable to have multiple exchange, not just one exchange. Take your portfolio, 50% of your portfolio, put it in one exchange, another 50% in a different exchange, and then you will be trading them. And then whatever you break your portfolio down into, whether you say 25% is going to be your long-term investment, and you break down the further 75%, whether you are putting on your mid-term investment or the less moderate risk, if we were to use that word, the moderate risk into a 50% of your bet, and therefore you leave the other 25% as your high risk trade. So your meme coins and volatile tokens will be on your high risks. And certainly you are going to invest in liquidity pools and whatever, you would have that in the 25%. But in your moderate 50%, then you will take trades on coins that you believe in their narrative, coins that you know that the market cap is growing, the use case, the development from developers that are operating or working within that ecosystem. There's a high rate that generates useful developments or useful use cases. And therefore, you'd have that in your moderate. And then your mature, the Bitcoin, the Ethereums, you'll have them in the balance of your 25%. So that's how you de-risk the portfolio. But then that's how then you de-risk where the funds are traded at. Whether you're trading them on the exchange, but then also you make sure that you've got them on your hard wallet as well as the hot and cold storage on your wallet. So it becomes very key in terms of how you separate your portfolio so that you de-risk against scams, you de-risk against the collapse of exchanges, you also de-risk against the positions that you are taking. Okay, the second one is two-factor authentication. This is very key. You have to have the two-factor authentication on all of your accounts and exchanges. And that makes sure that if you are hacked for some reasons, the second phase of authentication, at least it becomes off the exchange. So whenever there's a hack in the exchange and they are able to crack the passwords, but then they will need the second factor to authenticate. The last one, beware of scams. Be cautious of phishing attempts, Ponzi schemes, and fraudulent ICOs listings. Always verify authenticity of platforms and investments. So as much as these initial coin offerings, the ICOs, are dangerous, but also sometimes the airdrops are dangerous as well. You may have airdrops. At one point, I was affected by a scam on Jupiter's airdrop on Solana. And the first airdrop that took place in 2023, roundabout end of the year, I think it was between November, December, that was very sizable. It was a very huge airdrop on Solana, and Solana was taking off that year, right? And I had this link that showed that I qualify for the airdrop, of which I did qualify for the airdrop. Followed the link, went in, tried to claim, and that claim went into my Phantom wallet and just drained the wallet. Luckily, it was only that Phantom wallet. I had other Phantom wallets in other exchanges, and I was able to at least have that part of the wallet safe as compared to this part of the wallet. And again, this was a wallet-based transaction, and therefore it was only that wallet that was exposed, not necessarily my exchange funds that I was trading in my portfolio. So it's very key that you are careful about the initial coin offerings, the ICOs, or the airdrops, right? Or sometimes farming, there could be scams around farming as well. So be very careful of scams. There is no get rich quick schemes in crypto or in trading. Let's not say crypto. In trading, there are no get rich quick schemes. So please check, proof check, and recheck. It's the same as when you are transferring your funds between your own wallets or between your own exchanges or between the wallet and the exchange, in terms of you deciding to fund your own portfolio, maybe in a different exchange. Please make sure that your key that you are using for the wallet or for the exchange, follow those numbers. I know the numbers that you have in terms of the crypto numbers, they are very long, the blockchain numbers, but please follow your blockchain numbers and make sure that you have not missed any number. Because sometimes scamsters would only change the last two numbers or the last three. And therefore, make sure that you follow so that whatever you do, your money goes into the right destination. Because unfortunately, if you use a wrong code, whatever you lose in the blockchain, you will not be able to retrieve in some cases, not unless you're an advanced person in terms of cryptography. But I haven't had anyone that has been able to retrieve in crypto. But I know people that have got huge amounts of money. They would go out and try and find top-notch crypto investigators that can try and follow. But you don't know whether they sometimes are able to. However, for us, the recommendation is always make sure you proof check the numbers of your wallet or the destination of the exchange that you are sending to. Okay. On the psychological preparedness, avoid emotional trading. Don't let FOMO, fear of missing out, or FUD, fear, uncertainty, and doubt drive your decision. Stick to your strategy. The crypto market can be extremely volatile. Patience can help you ride out short-term fluctuations and avoid panic selling. On leverage and margin trading, caution. Understand leverage. If you choose to use leverage, understand that it implies both gains and losses. So you multiply your gains just as much as you multiply your losses. Make sure that you understand that when you are taking a leverage, and also what size leverage you want to take. Because often traders think that I want to multiply my gains by 50 and therefore I'll go for an 50x. What it means, if the market goes the opposite, you are also multiplying your losses by 50. So be careful. Don't think of the good case scenario as if things will only go as your wishes. So be careful, understand leverage before you then go on to leverage. Avoid over leveraging yourself. High leverage can lead to rapid losses. Use it sparingly and within clear exit strategies. And also, I don't trade cross leverage. So I only trade from my side isolated leverage. And the reason is I want to be exposed to the leverage on the trade I've taken, not to have my whole portfolio being exposed to the leverage that I've taken. Because if you take cross leverage, your position at the point close to liquidation, it will replenish itself in terms of that lot size by taking whatever that is available in the portfolio if you are taking a cross leverage. But if you are taking an isolated, it's only isolated to the trade, it liquidates the trade, and that's the trade that you are exposed to only. So these are the most important advice that you should follow on these things. And then stable coins mitigate your volatility. Keep a portion of your portfolio in stable coins to have liquidity that isn't subject to volatile swings of the market, providing a safety net during downturns. But the reason that you would keep some funds on your stable coins, we call it the dry gunpowder or the dry powder. It means that's the funds that you have when you pick up a promising token that's coming through, whether it's an ICO, whether it's a narrative that for some reason has now come up, new development that is being introduced, funding rounds that the team have done from the token, and as a result, the market gains confidence, and therefore you want to jump in, take a position on a short-term basis, and then pull. So you want to have that dry powder, and therefore it's important to use the stable coins. But also you must always be sure when you choose which stable coin to use, you want to be sure that stablecoin is backed by at least the guarantee around the available funds in case anything happens, because you want to make sure that there is adequate cover on that stablecoin. Continuous learning, stay updated. The crypto space evolves rapidly. Engaging with communities, attending webinars, or even formal education can keep you ahead of the market trends and regulatory changes. This is what I do. I try and assist with those developments, and therefore keeping up to date with the episodes that I put through is one of the things that will assist you in terms of which direction to look into to get more information, and then you can supplement what I provide over and above. So by implementing strategies, you can better navigate the high risk, high reward landscape of cryptocurrency trading, aiming to minimize losses while capitalizing on opportunities. Remember, there's no foolproof method to eliminate all risks, but these practices can significantly mitigate them. That's all that I have for you this evening. I wish you all the best. I will provide some update during this weekend. The altcoin is promising. All of us buoyant and looking forward to our trading positions. Please take note of Ethereum. Ethereum has reached some resistance that it has had for a while, and as a result, everybody is talking about the gains that Ethereum is making, and therefore look at Ethereum as well as the ecosystem in Ethereum. I'm expecting that Ethereum will be making upturns, and therefore, so there is a lot that one can make through Ethereum. But please study your trade. Make sure when you go in and you open orders, you open those orders at the right points in terms of your technical analysis, and make sure as soon as you do that, you've got your stop losses and your profit takings, and you know exactly when you exit. I wish you profitable trades. Talk to you later. Bye for now.